The crypto market has seen scandals before. Exchanges collapsing, stable coins imploding, billions wiped out overnight. But what if one of the biggest disasters in crypto history wasn't just a failed system? What if it was accelerated by people who knew exactly what was about to happen? Because a new lawsuit is reopening one of the darkest chapters in crypto history, the collapse of Terra Luna and UST. And this time the accusations go far beyond bad design. According to court filings, one of Wall Street's most powerful trading firms may have had access to inside information during the collapse, and allegedly used it to position themselves before the ecosystem completely imploded. If these allegations are true, it could rewrite how the Terra collapse is remembered forever. Welcome to Web3 Verse, the collapse that changed crypto forever. To understand why this matters, we need to go back to 2022. Back when Terra was one of the biggest ecosystems in crypto. Luna was everywhere. UST was exploding in popularity, and billions of dollars were flowing into the ecosystem every single week. At its peak, Terra became one of the largest crypto projects on Earth. Then suddenly, everything collapsed. In just days, over $40 billion vanished. UST lost its peg. Luna hyperinflated into oblivion, and panic spread across the entire crypto market. That collapse didn't just destroy Terra. It triggered the crypto winter of 2022. Funds failed. Lenders collapsed. Confidence evaporated. And eventually, it helped pave the road toward disasters like FTX. For years, most people believed Terra failed because of one thing: a broken system. But now, a new lawsuit is raising a much bigger question. Did someone know the collapse was coming before everyone else did? The new lawsuit. Terraform Labs may be gone, but its bankruptcy estate is still alive. And now, Terraform's wind-down team has launched a lawsuit against Jane Street, one of the most powerful trading firms in the world. For people outside finance, Jane Street isn't a household name. But inside markets, they're massive. They move enormous amounts of capital across stocks, derivatives, ETFs, crypto, and global markets. And according to the lawsuit, Jane Street may have used privileged information during Terra's collapse to protect themselves while everyone else got wiped out. Jane Street denies the allegations completely. They say the lawsuit is baseless. They call it an attempt to claw back money after Terraform's own failures. But the accusations themselves are explosive, especially because of what allegedly happened behind the scenes. The alleged information pipeline. At the center of the lawsuit is something called Bryce's Secret. According to the filing, this was allegedly a private communication channel connecting Terraform insiders with people inside Jane Street. The lawsuit claims a former Terraform intern later joined Jane Street and maintained connections with Terraform employees. Those connections allegedly became a back channel for sensitive information. Now, to be clear, these are allegations. Nothing has been proven in court. But Terraform claims that this communication network gave Jane Street visibility into major liquidity movements before the rest of the market knew what was happening. And in a system as fragile as Terra, minutes mattered. How Terra actually worked. To understand why this matters so much, you need to understand how UST worked. Unlike traditional stablecoins backed by cash reserves, UST was algorithmic. Its stability depended on a balancing mechanism with Luna. Here's the simplified version. If UST dropped below $1, traders could buy discounted UST and swap it for $1 worth of Luna. That process was supposed to restore the peg. And during good times, it worked. But there was a fatal weakness hidden inside the system. Everything depended on confidence. Because when users rushed to exit UST, more Luna had to be printed. And the more Luna got printed, the lower Luna's price fell, which weakened confidence even further. That created a dangerous feedback loop, a death spiral. And once that spiral started, it became almost impossible to stop. The yield trap. Now here's why Terra became so massive. A huge amount of UST demand came from Anchor Protocol. Anchor promised yields close to 20%. At the time, that sounded incredible. People treated UST like a high-interest savings account. Billions flowed in. But those yields created artificial demand. And once confidence cracked, that demand disappeared almost instantly. Suddenly everyone wanted out at the same time. That's when the system started breaking apart. The critical moment. Now this is where the lawsuit gets very specific. According to Terraform's filing, on May 7, 2022, Terraform withdrew around $150 million worth of UST liquidity from Curve Finance. Curve was one of the key liquidity hubs keeping UST stable. Removing liquidity made the system more vulnerable. And according to the lawsuit, Just minutes later, a wallet allegedly linked to Jane Street sold tens of millions of dollars worth of UST. Terraform argues that this accelerated the depeg, because in automated liquidity systems, depth matters. If liquidity becomes thin, large trades have much bigger impact, and once the peg starts slipping, fear spreads fast. The lawsuit claims Jane Street acted before the liquidity changes became public. Again, these are allegations, but if proven, that timing could become one of the most important details in the entire Terra story. Why timing matters so much. In crypto, information is everything, especially during a crisis. If you know liquidity is about to disappear before everyone else, you can reposition early. You can reduce exposure. You can hedge risk. You can short related assets. You can escape before panic fully begins. Meanwhile, everyone else gets trapped inside the collapse. That's why Terraform's lawsuit focuses heavily on communication timelines, wallet movements, and trading activity. They're trying to prove that certain players had advantages regular market participants didn't have. And if discovery moves forward, things could get very interesting. Because discovery means internal communications, emails, messages, trading discussions, private chats. That's exactly what Jane Street will likely try to avoid becoming public. The bigger problem. But here's the thing. Even if Terraform proves insider communication happened, there's still a massive problem with the case. Terraform itself was already found liable for fraud. Courts already ruled that investors were misled before Terra collapsed. And Kwon himself was sentenced in connection with the disaster. So Jane Street's defense is fairly obvious. Terra collapsed because the system was fundamentally broken, not because traders responded to market stress. That argument will likely become one of the biggest battles in the case. Was Terra doomed anyway? Or did outside players accelerate the collapse beyond the point of recovery? The real lesson nobody wants to admit. Here's the uncomfortable truth. Terra wasn't just a technical failure. It exposed how fragile crypto markets become when leverage, incentives, and liquidity all depend on confidence. Because once confidence disappears, everything disappears with it. Liquidity vanishes, redemptions spike, panic spreads, and systems designed for growth suddenly implode under pressure. That's why Terra collapsed so violently. And honestly, we still see similar risks across crypto today. Different projects, different narratives, same structural weaknesses. Why this lawsuit matters for crypto. This case isn't just about old drama. It could shape how crypto markets are regulated moving forward. Because if courts decide that private liquidity information can qualify as insider information in crypto markets, that changes everything. Market makers, trading firms, exchange relationships, token teams. All of it comes under greater scrutiny. And if evidence emerges showing coordinated positioning during one of crypto's biggest collapses, trust in the industry takes another hit, especially during an already difficult market cycle. At the same time, crypto has survived disasters before. MTGOX, Luna, FTX. Every cycle feels like the end. And somehow the industry rebuilds anyway. Final thoughts. The Terra collapse was one of the most devastating moments in crypto history. But now, years later, the story may not be finished. Because this lawsuit is asking a question that could reshape the entire narrative. Was Terra simply a flawed experiment that failed naturally? Or did powerful players see the weakness early and move to profit from the collapse before everyone else realized what was happening? Right now, we don't have all the answers. But if this case reaches discovery, we may learn far more about what really happened behind closed doors during those critical days in May 2022. And honestly, that could be one of the biggest revelations crypto has seen in years. So now I want to hear from you. Do you think Terra was doomed from the start? Or do you believe certain players accelerated the collapse for profit? Drop your thoughts in the comments below. And if you want to understand why stablecoins are becoming one of the biggest battlegrounds in finance right now, check out the next video. This is Web3 Verse. And I'll see you in the next one.